Thanks very much, Juliet. Let's get into the markets. Asian markets took Wall Street's cue, with markets there largely up today, with a slightly lower annualized inflation print out of the United States continuing to raise bets of Fed rate cuts in September, while Chinese stocks gained after the US extended the implementation of sweeping tariffs on that country. The Nikkei share average rose by 1.3%. The Hang Seng Index jumped by 2.6%, while the Shanghai Composite Index gained 0.5%. Over in the United States, S&P 500 and Nasdaq scored record closing highs yesterday. This as July inflation rose broadly in line with expectations, bolstering bets on a Federal Reserve interest rate cut next month. The Dow Jones Industrial Average rose by 1.1%. The S&P 500 edged up 1.13%, while the Nasdaq Composite Index advanced by 1.4%. Looking at local indicators, we see that the all-share index is up 1.12% at 102,468 index points. The rand is trading at 17.50 against the US dollar, 20.52 vis-a-vis the euro, and 23.75 against the British pound. Looking at the commodities, we see that gold is trading at $3,364 an ounce, platinum at $1,345 an ounce, while Brent crude oil is trading at $65.67 a barrel. All right, let's get into conversation now with Chantel Marks. She's the head of equity research at F&B Wealth and Investments. Thanks very much for joining us, Chantel. So most markets are running full steam ahead. Was the annualized 2.7% rise in US inflation, which was down 0.1 percentage points on the previous month, a factor that's helped to catalyze this?
Yes, I do really think that this was the main factor playing a part here. So if we consider what a lower inflation print means, we have to also look at what's been happening in the jobs market in the US. And recent revisions to jobs data there has suggested that the jobs market has come under some pressure. And the combination of these two things have increased the possibility of interest rate cuts in the US, and that really has supported enthusiasm by market participants.
So the local market continues to power ahead after hitting historic highs. It's now gone through 102,000, and we've heard from many analysts, that it's been driven largely or primarily by the PGMs and gold. Can they continue with this momentum? And what about South Africa facing stocks, like your retailers and your banks, for example? What's the prospect for them?
Well, I do think that Naspers and Prosus have also played an important role here, making up about 15% of the index and also performing very well over the last 12 months and indeed year to date. In terms of how sustainable this is, there is probably still some room in Naspers and Prosus, given that these companies still trade at a very deep discount to their intrinsic value. Gold, we still see gold buying and gold buying, particularly from central banks, but also from other investors, because risks remain quite elevated. And PGMs, once we start seeing a rally in those prices, they do tend to be sustained. And a lot of that, of course, will depend on whether or not PGM prices continue to rise, or at least we start seeing some stability in that price. But I think the biggest reason I still see support for the local market is exactly what you mentioned. The SA Inc. shares, particularly the banks and retailers, really have lagged this rally that we've seen on the local front, and these stocks are offering value. And in the context of perhaps better growth to come and easier conditions for consumers with lower interest rates and stable inflation, we could still see them do well also.
Since we're talking about retailers, we saw that the retail sales number came out for the month of June. It went up by 1.6% on a year-on-year basis. How does that stack up as opposed to the rest of the year? How is the consumer doing?
So we definitely saw a slowdown coming through in June, and this is in keeping with what we saw from the likes of Mr. Price and TFG when they released quarterly trading updates a couple of weeks ago. June was much weaker than March and than May and April rather, and a lot of that had to do, according to the retailers, with the timing of the school holidays. So we had a shift in the school holidays from June to July, and according to the retailers, that had a big impact on foot traffic traffic and indeed trading in most of their stores. They also guided and said that July, up until the point where they reported on, looked a lot better again. So it's quite interesting that something like school holidays can have a big impact, but I think that it definitely played a role in the June reading. And additionally, June last year was exceptionally strong. So I think that some base impacts also playing a part.
Very interesting. Netbank, they announced that they're going to be acquiring a 100% stake in fintech business iKhokha for 1.65 billion rand, which they say is going to assist them to better serve the SME market. What's your understanding of this move that they've made, and does that put them at an advantage relative to their traditional competitors?
Yeah, I think this was such an interesting move from them. They just announced that they're looking to exit their West African banking operation, and they're going to have to deploy that capital somewhere. We've actually spoken as a team as well, and the consensus was that for Netbank to become more competitive and to regain a competitive advantage, particularly in the SME space where it's been historically strong, it will need to go into fintech. So this fits in with that narrative. Of course, Netbank has been under quite a bit of pressure in that space because Capitec business entered that market not so long ago and have been rapidly gaining market share. We'll have to see how it plays out and how the integration actually contributes to the broader Netbank offering, but I think probably a step in the right direction for them.
We don't have much time, but I do want to get your comment on Sasol, since they put out a trading statement yesterday showing that their earnings are expected to increase by more than 100%. Just your quick view, would you sell, buy or hold the stock? Your quick view.
Yeah, I mean, so the devil's in the detail in that print. There are a lot of one-offs that's propping up the results. So I think that operationally, I would still want to see a turnaround. I would want to see some support coming through for pricing in their products before I actually pull the trigger. I think if it's a stock that I have, I'll probably hold it. And if it is a stock that I don't have, I'll probably wait and see.
That's a nice answer. Thank you so much for that, Chantel. That was Chantel Marks. She's the head of equity research at FNB Wealth and Investments. After a short break, Juliet will have more news for you. Have a good one.
The Clientele Legal Business Plan. We'll take care of your legal matters.
The biggest mistake I made in business was not being with Clientele Legal from the start. A water pipe burst outside our premises. Business came to a standstill. It caused havoc.
I couldn't get clients in. I couldn't do any business. The council refused to repair it. Until I got Clientele Legal involved, they repaired it within a week.
I got a Clientele Legal policy because I trust the brand and I know with them my business is legally protected.
Clientele Legal is value for money. It's worth every cent